Welcome back to Insights Now. I'm David Kelly, Chief Global Strategist here at JP Morgan Asset Management. US equities have been on a tear in recent years. After climbing 26% in 2023, the S&P 500 finished up 25% on a total return basis in 2024, marking the best two-year stretch for the index since the late 1990s. That being said, with a select few companies driving the bulk of this rally, markets have become unbalanced, and concentration risk remains a significant issue heading into 2025. In times like these, active management is as important as ever. That's why our 13th season of Insights Now, titled The Analyst's Edge, a day in the life of equity research analysts, will be all about the research backing our portfolio managers' investment decisions. We'll sit down with best-in-class buy-side equity research analysts from across JP Morgan, exploring a range of sectors and diving deeper into the most exciting trends driving markets today. With a new administration moving into the White House, 2025 is likely to be yet another exciting yet volatile year for equity investors. So stay tuned to learn more about the opportunities we are following most closely. At the heart of the recent equity market rally sits the semiconductor industry. Home to companies like Nvidia, Broadcom, and other key beneficiaries of the AI frenzy, semiconductor stocks gained over 75% in 2024, far outpacing the broader market. That being said, semiconductor applications extend far beyond just artificial intelligence. Companies serving traditional end markets like automotive, consumers, aerospace, or defense have lagged behind. While artificial intelligence will remain a key source of demand for the industry, improving demand from these other end users could drive the next leg of the rally. To share some of his latest thoughts on the semiconductor industry, Gabriela Santos, my new co-host, will be joined by Eric Giornati, a technology-focused equity research analyst here at JP Morgan Asset Management. Now let's get started. Over to you, Gabriela.
Thank you so much, David. Eric, welcome to Insights Now. We're very delighted to have you here. I want to just start off with, you're a technology research analyst and investor. How did you end up there and why technology?
No, thank you. First of all, thank you very much, Gabby. Really appreciate you welcoming me here. I started my journey precisely in 2000, maybe a little earlier than that. So I joined what was back then in San Francisco the preeminent technology investment bank called Montgomery Securities, which ended up being like the Bank of America investment bank and then Merrill Lynch investment bank. I started as a junior analyst, right down the bottom, and I was like an analyst on supply chain industry, disk drive industry, hardware industry. Then 3 years after, I transitioned to covering semiconductors. And then I transitioned to covering cybersecurity and telecom and networking. And then I moved to the buy side, I want to say like in early 2014. And there I started being an analyst responsible for investments, not just in hardware, but also in software and broader internet. And then in early 2000, precisely January the 3rd, 2020, I joined JP Morgan. I've been a technology investor since within JP Morgan and primarily on growth investor. As far as like what triggered my move to actually cover in technology, look, that's all I wanted to do my entire life. Ever since I know I've been passionate about technology as a sector. There was an episode in my life when I think to supplement my income back in mid or late 98, I used to actually be sort of like a busboy at a hotel where the technology conference from Montgomery Security back then was pretty famous. And I was like pretty wowed about the whole thing. And that gave me even more passion to basically join the industry.
Wow, what a story, Eric. Yeah. That is so cool. And what a time to have been in Silicon Valley and being so closely following technology.
Yes.
It's interesting that you wear two hats, the research analyst and the portfolio manager. Yeah. And for us not in the day-to-day, what's the difference between how you think as a research analyst and how you think as a PM?
Yeah, no, great question. Like as an analyst, I'm basically rolling my sleeves and doing deep dive fundamental work around companies. Almost think of it as detective work. Talking to companies, talking to management, sifting through financial models, doing a lot of due diligence, attending technical conferences, listening to podcasts, listening to pretty much everybody, especially around nowadays around Gen AI, really digging deep into the fundamentals of the technology from underneath the ground, and then working my way up to the top to make investment conclusions. Now, as a portfolio manager, that's a completely different game entirely. I'm an asset allocator. I am looking, obviously, I have a lot of investment opportunities between semiconductors and software and hardware and internet, and I have to make allocation decisions around those investments based on risk reward, based on appeal, based on the future, obviously. But like as an analyst, you're thinking 2, 3, 5, sometimes 10 years. You can't afford to think 10 years ahead as a portfolio manager. You have to live in the moment, be an asset allocator, take into account, obviously, outside risk and opportunities, whether it be it's interest rates, inflation, like the direction of the industry, a whole host of factors that come into the asset allocation angle of doing the work.
You can't just live in the future as a portfolio
Yes,
manager.
too much in the future.
Too much in the
Yes.
future. And if you wouldn't mind, then what's a day in the life for you? Of course, I'm sure not every single day is the same, but how do you stay up to date with this constant innovation that's happening in technology?
Yeah. Well, first of all, I feel very, very blessed and lucky to live in this moment. It's very, very rare to actually live in a moment where there's a lot of change, just fuels a lot of passion. If you are an inquisitive mind and a mind that is really gets its fuel from thinking, critical thinking, looking at new technologies, this is the moment. And so right now, because of that, it's because it's really reinvigorated technology in some respect, I'm waking up as early as I can. I start my days very early at like 5:30. I try to hit the gym whenever I can, very early. I put on webcasts, conference calls. I listen. I try not to answer emails around when I'm working out. I use that time really just to catch up on things that I didn't listen to the prior night or things that I missed during midnight. And again, like the world of technology investing is global, so it's not just listening to things that are happening in the US, but also things that are happening globally. Then I jump in right into conference calls and meetings and meeting with portfolio managers. My day is really packed from start to finish. A lot of calls, a lot of company calls, sometimes a lot of earnings, obviously. During conference season, I'm basically running around like back-to-back meetings. And then I try to craft time for some thinking. Obviously, that's very, very important in terms of just sitting, digesting all the information that you've had on a daily basis. Very important to catch up with your colleagues. I spend quite a bit of, try to carve out as much time as possible to talk to my colleague, Joe Wilson, who runs the tech fund here, many of my colleagues as well. And then, of course, like just do some deep dive work in the afternoon, whether it be looking at financial model, looking at my comp sheet, looking at my estimates, isolating a few companies here and there, and just like doing a really deep dive work on the risk reward, whether it's still feasible, whether everything matches up with my thesis. And that is like the day in a nutshell. It goes very late. All the way sometimes into 10, 11 p.m. So yeah, but it's exhilarating. It's fascinating. There's a lot of passion in there. It's very dynamic.
And I have been at conferences with Eric, and I can attest I've seen him at the gym at 5 a.m. But of course, being a research analyst isn't just financial models on Excel. So any interesting stories from visiting different tech facilities?
Yeah, those are like the moments.
Yeah.
Those are the moment that you live for, is when you go to meet management. By management, we don't mean like the CEO and CFO. No, the best management meetings that we have and the best moments we have is when we meet like the engineers at these companies. I will never forget in November of 2022 when ChatGPT got launched. Mm-hmm. And as you know, we have a biannual technology trip that we do to Silicon Valley where we meet with companies. Guess who was on the list of our meetings? NVIDIA. Oh. And so we met with their head of AI at the time. And I got to say, like, those are like the most fascinating moments in my professional life when I get to meet very smart, incredibly talented people from these companies that have done this for a living for a very, very long time, and then they share their wisdom. I think one of the things that I really feel very incredibly grateful and appreciative of is how generous companies are with making us aware of what's going on in market, because let's face it, like nobody's closer to the action than these companies. So that intellectual back and forth is just absolutely phenomenal. But to take that, the output of all those incredible meetings that we've had with startups and with big companies, and sit down later with the team, the portfolio managers like Felice and Gary and Eitan and Joe, and distill that into actionable items that our investors benefit from is even more exhilarating. And that's really like the what we live for, is that take all that hard work that we've done, the preparation over months and years, all that knowledge that we've had over the years, and distill that into actionable investment is really what's very critical for us.
And super exciting that you're living the day-to-day of this historical time.
Yes.
And for some of us, we're not that deep in the technology world, although every single aspect of our lives are certainly influenced by it. So how would you explain in plain English to some of us all the different subsectors within what sometimes in layman terms people just say is tech?
Sure. So there's various sectors within technology, all of which are mission critical to the entire industry. And the big one is software. So that's your applications. That's your Uber. That's your all the applications that you have on your iPhone. Your applications on your desktops, whether Microsoft Office or anything that you use. So that's a software layer. And within that, there's the visible software layer that you see. But beneath that, there's a bigger software layer. It's called infrastructure software. That's where Amazon Web Services, Microsoft Azure, Google Cloud come into the mix, and many other clouds, including also our own cloud here at JP Morgan Assets, or JP Morgan period. And so there's the visible aspects of the software, and there's also the invisible aspects of the software. So that's a big sector. There's obviously internet that's called Meta and Google. You could look at them as applications or just internet infrastructure, but that's in general like very, very large sector. And then there's semiconductors and hardware. So that's like the pumps and the plumbing and everything. What's fascinating is this sector, very, very well, has been ignored for years. Yeah. For the longest time, people thought like, well, software just runs on top of the cloud and the cloud is abstract. Little that they knew, and I think this came into fruition in 2020 when we had shortages impact software availability, that there is a big layer of software that runs mission critical hardware. Fast forward to GPT moment, the hardware and the semiconductor became even more and more important, because guess what? Without GPUs, which is the graphic processing unit that NVIDIA provides, you're not going to have the large language models and AI function. So that importance of the semiconductor food chain, the hardware food chain, the data center food chain rose up pretty meaningfully. And then, of course, there is telecom, the pipes, that's the Verizon and AT&Ts, the networking and the infrastructure that runs all the communication between applications, machines to machine, or you and I.
And that's interesting. There's the digital aspect of tech and
Correct.
the physical aspect of tech that's coming more to the forefront, right?
Yeah.
And in that physical space, where do you see the most opportunity right now?
Yeah, no, I mean, like I said, all the action right now is around semiconductors.
Yeah.
And just to clarify, it's not just semiconductors. It's the semiconductors and also the overarching infrastructure that is going to house semiconductors. That includes power. That includes data center footprints, the location of these data center footprints. As I'm sure you've been paying attention to, the new Trump administration announced yesterday the whole Stargate program with OpenAI and SoftBank and Oracle, and that's like a $500 billion investment over many years. And just to give you a flavor, just in 2 years, the cloud companies themselves between 2023 and 2025 are going to be spending north of $500 billion just on large language model training and inference. And then if you include 2026, that number is going to shoot up to like $900 billion.
Wow.
And so all the action that we see right now is just putting in the rails, the infrastructure, the GPUs to actually enable the training and inference of these large language models. So build outs of that industry is going incredibly aggressively, and there's a lot of opportunity, investment opportunities there right now.
And as we saw finally the market understanding last year as well, that this involves, semiconductors and companies in the tech space, but also industrial companies, utility companies, energy companies. It's really an across-the-board effort
No,
here.
it's a global collaboration of pretty much all the industries that were for a long time really did not have a whole lot to do with technology. Like utilities did not have to do a lot with technology. Like, when EVs came into the scene, people started talking about utilities, the grid, alternative energy. But I think this takes it to a whole new level because just one installation of GPUs could be the equivalent to how much New York City consumes in power. And so now it's come at the forefront. That's one of the reasons why a lot of folks in technology industry were really excited about this new administration because they promise in their campaign that they're going to remove all the bottlenecks to enable AI. The biggest bottleneck by far is power utilities because it takes a long time to get the permits, put in infrastructure in place. So that's very exciting because these are critically enabling industries to this new world. And now they're going to be forced to move even more aggressively than they've ever had before. And there's a lot of opportunities to capitalize on that as well.
And help us understand a bit more, Eric. You're very excited about this moment we're in around generative AI. Help us put in scale the moment that we're in and the opportunity.
Yeah. Well, I wish I had a crystal ball, but I don't. But when we have history to guide us, we don't have these moments every 1 or 2 years. We only have them every 10 to 15 years. Every 10 to 15 years, there's a platform shift in compute. It went from the mainframe era to the desktop era to the mobile era to the cloud era and now the generative AI era. And each one of these builds on top of the innovation of all the previous cycles. And if you look at all the previous cycles and what they've allowed to do is they've really sponsored and supported global GDP, going 5 and 10x to the point right now where it's like north of $100 trillion. That would not be possible without all these innovation combined making that happen. Okay, so we have a 7 to 10x, improvements in GDP over decades. We think this could be as big, if not bigger. So what does that mean, right? So we're not talking hundreds of billions. We're talking tens of trillions of dollars of incremental impact to global GDP as a whole, because this is going to be a global GDP play. And yes, like the scale of this is like nothing we've ever seen. Again, like I mentioned, like the CapEx numbers, close to like $1 trillion in just, 3 years. And we haven't even gone like to the $500 billion that just got announced and many other announcements that are going to come to happen. So yes, so if you're spending $1 trillion on capacity, just 3 years, automatically you expect to generate multiples of that return, especially if you've levered to get that. So I think this is, and as far as like the benefits goes, we see that plain and simple. There's a lot of benefits that we've already seen that we can talk about that if you'd like, but we think there's a lot of applications that are going to be born today and into the future that are going to allow GDP to even accelerate even more.
And maybe some that we can't even visualize right now that will evolve over time.
That's the most exciting piece of this.
Yeah.
Because what we see today is so exciting. We can't wait to see what's going to be even more exciting in the next 5 and 10 years.
And thinking back when you were starting in Silicon Valley, of course, interesting time, around 2000, eventually the dot-com bubble burst. We get asked a lot, yes, there's a lot of excitement around the moment we're in generative AI, but do you see any parallels to that time in the 2000s, over-enthusiasm or over-appreciation of how quickly we'll realize that gain and who wins?
Yeah, I don't see that as much as I saw it in 2000 because I lived there. Yeah. Certainly there are things that you should be paying attention to. Like, for example, like startup valuations. Gen AI startup valuations have gone astronomical. I mean, I think like a starting point right now is like 20, 30, 40 times revenue. That's a pretty hefty multiple. I've seen startups be valued at 150 times forward revenues. So yeah, like there's aspects of this that are starting to, we paying attention to. Of course, like the big checks that are being written upfront for this AI infrastructure. Certainly, we're paying a lot of attention to that. But as far as like remember, a lot of companies back in 2000 did not really have fundamentals, and the spenders had weak balance sheets and weak financial positions. We don't see that yet. Right now, like the big spenders are really financially sound companies that are making intelligent bets on the next 5 and 10 years, not just to maintain their moat, but to extend their moat and create new markets. So we don't see quite the same conditions, but certainly there are things that we're starting to pay attention to.
There can always be that company that puts a little AI pixie dust on what it does.
In at some points. And I bet you anything there's going to be like at least 70 to 80% they're going to be putting pixie dust. And by pixie dust, it's not like fake AI, but it's like AI that has no moat. And we're going to see quite a bit of that. History is going to repeat itself here one more time. And it's our job to decipher which companies have a sustainable and durable moat versus the one that won't survive.
Absolutely. And you alluded to that benefit that you see eventually evolving from Gen AI. What's the most exciting aspect you're thinking of?
I have to agree with a lot of folks that are looking at healthcare as a big area of potential opportunity. Obviously, like Gen AI is going to be in the financial service industry, is going to be an implement. It's going to be like a continuation of what we've done over decades, which is implement technology to be more productive and also make more money. But like in healthcare, it could be life changing. I myself have been using GPT since 2023 for healthcare purposes. I don't need to go to a doctor anymore to ask for follow-up meetings and follow-up conversation. I can just put all my tests results, and it does a wonderful job. I just did it for my mom, and I put all her test results into GPT, and quite frankly, I did not need to call the doctor and ask, like, hey, what's going on here? And I put text, images, you name it, and it was amazing to see like the end results of that. But that's just the tip of the iceberg. When these large language models are going to be in a position to shrink the time to drug discovery from years to weeks, that's going to be really, really impactful. So that's one sector that I think there's a lot of opportunities for change, and good change for the entire global population to benefit from.
It's going to be a lot more than us trying to come up with funny visuals using ChatGPT or the Meta AI or something.
Yeah, and you can already see it in full display right now.
Yeah. Very, very exciting, Eric. You mentioned you love listening to tech podcasts.
Yeah.
So we have a bonus question at the very end here. For someone that truly wants to get more in the weeds here around this moment in technology and generative AI, what's a podcast you'd recommend for us?
I listen to a lot. It's hard to keep up. But I think like A16 and Andreessen Horowitz, they do a great job with their podcasts. I think BG2, the pod, does a great job. Every once in a while, I try to listen to the All In podcast because they bring the political, the social, and the technology aspects all under one roof, which is, I find, pretty interesting, just to set me like a few stages higher. I think what I recommend is not just be wedded to one podcast, but getting different perspective from different channels and using them collectively to not just to get educated. I think, again, like I love the generosity of some of these folks that really don't need. I know there's self-interest in making your own podcast, you're more visible and all that. But the fact of the matter, they're really, really generous. Like an investor like Brad Gerstner really does not need the extra attention, but he's very generous with his time and makes advice available to everybody. So that I appreciate that.
Super good recommendations. And I trust you because maybe it was 2-3 years ago, you and I were talking about semiconductors and you recommended the Chips War book, which I read right away. And it gives a whole history of the semiconductor industry, where we are, and potential fault lines and flashpoints there.
Yeah, especially when the government is involved.
Exactly, exactly.
Yeah.
Thank you so much, Eric,
Gabby,
for spending some time with us.
Yeah, no, thank you very much, Gabby. Really, really appreciate you taking the time with me. Thank you.
And thank you so much, everyone, for listening. And we will have more podcasts with some of our other research analysts, including some of the sectors we talked about: healthcare, utilities, industrials. So stay tuned. Thank you.